Welcome to Plus TV. Today we have Jeroen Tielman, who is the founder and CEO of IMQubator, an Amsterdam-based emerging manager seeding fund. Jeroen, thank you for joining us today. Tell us about your personal history and why you founded IMQubator.
In '86 I started working with AMRO Bank, which later merged into ABN AMRO. I worked in the areas, I was an analyst, a stockbroker, also here in New York already 20 years ago. After that I worked at the corporate finance M&A department of ABN AMRO. The last 4 years I was global head of product development. Then I left ABN AMRO to set up my own first company, Fund Partners, an independent investment engineering boutique. After that I joined Cordaris, a pension fund, and I was asked at one moment to be part of a working group advising the Dutch Ministry of Economic Affairs. And the working group was chaired by Roderick Munsters, then the CIO of APG. And at that moment I got the idea to set up IMQubator. The goal of IMQubator is to connect institutional investor with an underexploited area, being the area of emerging managers. And there are many benefits for investors to be connected with emerging managers, and that's what we're doing.
IMQubator was initially capitalized in 2009 with a $250 million investment from APG, that's the asset manager for Dutch pension fund ABP. Talk about the advantages of your relationship with APG.
Well, the major advantage is that it's an institutional endorsement. The hedge fund market is a global market. Emerging managers is also a global market. It's very important also for our ambition to have other major institutions join our fund, that a party like APG is the first institution who had committed to IMQubator. It also relates to the fact that we have a pure end investor perspective, and it's my understanding that it's one of the reasons why they joined.
You mentioned that a primary focus of your fund is that IMQ takes an end investor perspective. Elaborate on this concept and why it's significant for the hedge fund industry.
Well, the end investor perspective is something basically I already started implementing at the end of the 90s. One of the first products I engineered with ABN AMRO Bank was a question from the distribution side, whereas the manufacturing side did not really have the capacity to engineer the product. So basically we started engineering a product based from the end investor perspective. And that is what a theme I have been pursuing since then. With IMQubator and hedge funds in particular, we noticed that a lot of investment products are being engineered to be sold, and they're not being engineered to be bought. What I mean with that is that if investment funds are basically set up by the manager, who retains, for example, a lawyer, sets up a structure, but everything is designed to protect the interest of the manager, logically. And in my opinion, that's also how the industry standard has evolved in the governance structure for hedge funds, mainly protecting the interest of the managers. So by taking the pure end investor perspective, and especially we're talking about main institutions investing in hedge funds, why should they buy something which is engineered to be sold to them instead of buying something which is engineered to be bought by them? And that is exactly what we're doing. So what are the main elements we're looking at? The last few years, investors have been complaining about certain aspects of hedge funds, like the lack of liquidity, like fees, like the intransparency. They had several questions. And this is the time to do something about it. So basically what we're doing is we're adjusting the governance structure together with the emerging manager to make it more end investor friendly. And that involves, for example, giving investors more power in case there are conflicts of interest between the manager and the investor.
Can you give us an example of how you take a pure end investor perspective?
Well, it's very important for investors to see exactly what they get. So what we saw with one fund we were considering to invest in was that the term structure of the underlying investments was not in sync with the liquidity promised by the hedge funds, which is the usual 30, 60 or 90 days notice. We noticed that the majority of the portfolio had a 1.5 year basically lockup, given the instruments they were trading in. So basically what we said in consultation with the manager, that they should change the product into a hybrid structure, hybrid between on one hand private equity and the other hand a hedge fund. So basically this resulted into the manager issuing a series of short duration, closed-end, self-liquidating cells, so that the investor exactly knew what they were getting into as far as liquidity is concerned. And this alignment of interest between, on one hand, the manager and the end investor, and providing transparency amongst each other, is something what I see as a major task of seeders. Seeders connect to managers in a unique moment of their professional life cycle, where in this unique moment they really need to have the first investor on board. So therefore that is the moment where you can really truly align interest between, on one hand, the end investors, whose interests are being represented by the seeder, and the manager. And this unique window of opportunity, that is what we take.
Jeroen, talk about what advantages you provide to emerging managers when you decide to seed them.
The advantage of us as a seeder is that we provide a true partnership. We commit to the managers for 3 to 5 years. We accept a 3-year lockup, subject to guiding and monitoring. So the partnership means that we need to be close to each other. Literally, we like to have the managers move over to our office in Amsterdam so that we can be close partners and help them to grow their business. We're not a hedge fund hotel, but we're providing them a push in the back. There are two main casualty or reasons why emerging managers could falter. One is operations and the other is business development. As far as operations are concerned, we help them in designing the back office process. We help them to set up a service level agreement, and we help them in selecting any parties to which they could outsource it. And we also closely monitor the operations, amongst others. The one location also provides us with the opportunity to have a weekly contact between our CIO and the CIO of the fund we have seeded. So that's one part. The other part is business development. As far as business development is concerned, we're currently setting up the IMQubator Capital Introduction Network, which in the end is meant to be a global network consisting of independent persons who have very good relationships with end investors. And also there, we value at the end investor perspective. So we would like to cooperate with people who have really a reputation to lose as far as the trust they have earned with the investors they know. And also there, we want them to be very critical about what products they would advise to their investors. So we like to connect with these people who have the pure end investor relationship and could be located anywhere in the world. And we're currently taking the first 2 steps. So we have a membership agreement in place. We have also a system we're designing for them to basically, for both the underlying fund as well as the person in the market or the placement agent, to really track in what status the discussions are between the hedge fund manager and the end investor they represent.
So what kind of managers are you looking for? What are the characteristics or criteria?
When evaluating managers, we basically look at 2 dimensions. One is skills and the other is mentality. As far as mentality is concerned, we're looking for people who really want to win the Olympics and have the belief that they can be admitted to the Olympics and that they can win. We look for people who have a passion for their business, a drive, and for who this is a logical step in their total career development to set up their own firm, and who basically have been preparing for this already for many years. The other dimension is the skill set. The skill set, we basically look for pure strategies who are really innovative and specialized and focused. We also like to see strategies where risk discipline is a natural element of the investment strategy, as we're looking for absolute return propositions. Then thirdly, we do not like any strategies which are illiquid.
Do you prefer any particular strategy or any particular sector?
We're looking for talent. We're not looking particularly for strategies. So the talent is leading, the strategy is following. And like what I said before, we like to have a focused, innovative, risk-disciplined strategy. However, one could argue that maybe this year, in the current markets with a lot of volatility, strategies like volatility arbitrage could do well or better. But we can't really predict what the flavor of the day is. And as I said it before, We really believe in a partnership with top talent over a longer term. And there we don't believe that over a longer term, certain strategies will do better than others.
Talk about your selection process and how you select managers.
The way we select managers is that we don't have a past track record to look at. So we need to look into the present. So we do very much a process analysis of 4 dimensions. One dimension is investment management. The second dimension is risk management. The third dimension is operations. And the fourth dimension is team and team dynamics. And with this process analysis, especially in the last part of the due diligence, we do this by having in-depth interviews with the total team. So for example, on the dimension of investment management process analysis, we have interviews ranging, starting at where do you get your ideas from, into minute detail, give us some examples of some ideas, trade execution, post-trade discipline, etc. And by having these in-depth interviews, we see a better picture than just looking at past numbers.
Talk about your decision to partner with Hong Kong-based multi-manager firm Synergy Fund Management to look for the best emerging manager talent in China. What do you see in China?
We get a lot of applications. Increasingly so, we get applications from Asia. And we already have a few funds in our portfolio which are from Asian origin, the management companies from Asian origin. So I met Eliza Lau at the end of last year. We compared notes and we found out that we share the belief that the emerging manager space is a very interesting space for Asia. So we basically see 2 things happening. One, an increasing number of talent is coming out to the market and starting their own funds from China, from Japan. China is a market where it's slowly opening up, but there's certainly momentum, and the momentum seems to be increasing. And we just do not want to wait and see what's happening. We want to start moving. Also, we see investors in Asia increasingly being interested in the hedge fund space, and also particularly in the emerging manager space. And also with the end investor orientation, we think that is a theme which could be appealing for Asian investors as well. So that's why we said, let's take the first steps to a cooperation in Asia, which could lead to having a second IMQubator locally in Asia, in Hong Kong.
So is IMQubator's model of aligning interest for the investor and taking a pure end investor approach the future of seeding? And what do you see as the future of seeding?
I think the model is the future of seeding, because as I said, seeders have the unique opportunity to truly align interest between the end investor and the hedge fund manager. The other thing is that this is the moment where a lot of long-term investors like pension funds and insurance companies start realizing that having the majority of their portfolio being long-only exposure, like as in equities and bonds, is a major mismatch with the nature of their liabilities being literally cash outflow obligations, which are more absolute return based. So therefore, this is the moment for these investors to reconsider the word alternative. Alternatives already exists as a definition for the last 25 and 30 years. It's not an alternative anymore. It should be a major part of the portfolio, hedge funds, instead of long only. So long only should be reduced, and this is the time for a lot of long-term investors to increase their allocation to a skill-based asset class with a better absolute return structure or a better nature. So in summary, this is a unique moment of time where the hedge fund industry can say to investors, we hear what you're saying, we deserve a larger allocation, we will make our products more end investor oriented. We'll make it a buyer's defined product instead of a seller's defined product.